Joining us now for a bit of business news is KPMG Chief Economist Brendan Rynne. Brendan, good morning to you. All eyes on the clock today, 2:30, that's when the announcement comes down. Which way do you expect the RBA to go?
Oh, look, I think virtually, definitely a 0.25% cut. So you'll see the cash rate drop from 0.75 down to 0.5% today. So I think over the weekend, with the lifting of the coronavirus now to a World Health Emergency, I think pretty much that cast the die for the Reserve Bank today.
Brendan, could the RBA go the double here and go half a rate cut?
Yeah, look, I was actually thinking about that on the way in, and the only issue with that, and so yes, definitely a potential. However, what that'll do is bring the cash rate straight down to 0.25%, which is the nominated rate the Reserve Bank set at the end of last year that they would then start consider quantitative easing. So whether or not they want to basically put themselves into quantitative easing territory straight away, I'm not exactly sure that they would take that option. So 0.5 this month, possibly another cut next month. And what that does is give the Reserve Bank a little bit of time to think about its options with regards to other monetary stimulus to the economy.
Brendan, it's quite divisive, this issue. There's a lot of economists, a lot of experts who say this is not a good call. If you were in charge, what would you do?
Look, I think that there's domestic reasons to drop the cash rate. I think last month's Reserve Bank meeting, if it was me, I would have probably dropped it then because of domestic factors. We've had a pretty tough summer with regards to the bushfires and also the continuation of the drought. And as your colleague just noted before with the weather, it's only starting to see some good rain events now.
Yeah, we are only starting to see some good rain events, and some of those industries are coming back. At the same time, you're seeing a big problem in the travel sector and the education sector. What does this say about the health of our economy and really the structure of it, Brenda? Do we have too many eggs in too few baskets?
So remembering the Australian economy, 75% of our economy is in the services sector. And so with the higher education, tourism, and those that are most exposed to the coronavirus from a expenditure perspective, those five sectors only represent about 13% of total GDP. So while there's still a large amount of depth to the Australian economy, it's not insignificant those industries that are most at risk. What we will find with the coronavirus, however, is, and the latest data coming out of China shows that Chinese manufacturing is virtually stopped. And so what we'll find is there's an immediate issue with regards to some of that services, transactions, tourism, education, but it's more our connections to China that are going to have a delayed effect because of the slowdown in manufacturing there. So you might see slowdown in the amount of demand for some of our commodities later in the year.
OK, Brendan Rynne from KPMG, thank you so much for your time this morning. And as I mentioned there, all eyes on the clock at 2:30 today, but it seems very likely that there will be at least a 0.25% of a cut, which takes us to a new low.